Hey, what's up, everybody? Today, we're going to have an update on what was the largest bet in Wall Street Bets history. We're going to have a special guest later, Joe Springer, to talk about the specifics of the company. But before that period, I want to just give a brief dive into some basics of the company. And if you stay until the end of the video, you're going to have the opportunity to get a 50-page research report that my investment research firm, Braun Capital, had the opportunity to help promote and work on. My name is Jacob Braun. I'm a writer for Seeking Alpha and the founder of Braun Capital. I'm going to share my screen real quick, and then we can get started. Real quick, one tool I like to use for investment research and to find companies is stockcard.io. They're the sponsor of this video, and I would highly recommend checking them out. If you end up getting a subscription after seeing us, please use the code BESTOFUS to just let them know we sent you. So if we look at the company on Cassava Sciences, you can see struggling operations, high growth potential, pessimistic investors. So that's a great way to describe this. It has great growth potential because this company is producing what could become the best-selling drug of all time. It's an Alzheimer's drug that's a single oral pill that has the best clinical trial data to date. And all this will be included in that research report. But recently, it's been hit by some short and distort attacks, and it really let investors down without announcing any key data, and that's why the investor pessimism is so low. Analysts are mixed on this because it's a very controversial stock. Some people are very strong bulls, some people are very strong bears. You'll see a lot of very heated discussion on Twitter, on Seeking Alpha, and other discussion points. I just want to look at the return here. So if we look at the 1 month, we've had a rough 1 month. If we look at the 1 year, again, we've had a really flat with some huge peaks in here. You can see that the high volatility 5-year, we actually are up quite a bit because we were down in the $1 to $2 range. So the key with that is there's a lot of high volatility behind the stock, which makes it a very risky stock. And anytime we invest in a risky stock, we want to be smart about how we do that. We want to mitigate our risk. One of the biggest parts of investing isn't just making money, is not losing money. And one great strategy to do this is used through stock derivatives, specifically options. I'm going to touch briefly on two different ways to do this. One is through buying puts as, in a sense, an insurance on every 100 shares you own. The second is doing covered calls, which is, in a sense, a way to pull money out of your risky investment to put into safer investments. I'm going to do a video later in early May on covered calls and a great strategy and how to use them. This is a strategy commonly used by hedge funds and more sophisticated investors that you can use to help, one, mitigate your risk, but two, make money off your investments. Cassava Sciences is by any measure a very risky investment. So just be smart when you invest in it. I'm heavily invested in it, and I'm a big believer in it, but I definitely use strategies to help mitigate my risk. With that being said, I'm going to hop over to my talk with Joe, and I hope it gives you some more information. Welcome, everyone. Thank you again for watching. And we have Joe here. Joe, would you be able to introduce yourself?
Yes, I would, Jacob. Hi, everybody. I'm Joe Springer here. Very happy to be here with you guys today to talk about Cassava Sciences. I was the #1 ranked stock analyst in the world, and now I do Tendies Club, and I was a certified technical trainer too, so I help teach about the market on Tendies Club. Come check it out. Thank you, Jacob, and best of us for having us today.
Yeah, so thank you for coming on, Joe. I think a lot of investors in Cassava are a little bit thrown off right now by the recent large drop in share price after all the already large drops. So kind of, what do you think of the whole situation, kind of big picture?
Well, I feel like they're still up quite a bit. Stock was at $2 not too long ago. It was at $6 when I got behind it about 16 months ago. So it's still up quite a ways. The whole market for innovation, we saw ARK Invest, ARK's lead ETF, is down more than 60% from top to bottom. So the average innovation stock is off by more than 3/5. So it's been very, very, very tough. And we've also seen repeated short and distort campaigns with again and again and again provably false information as the stock gets hammered. So it is disconcerting, but it does not make me lose faith in the drug we have so much that is still pointing to a miraculous drug. And if for the investors that have the stomach for it, it wasn't that long ago that innovation was going so high, and people were like, oh, I missed my chance.
Yeah.
For investors that have the stomach for it, this is blood in the streets, officially blood in the streets for investors that have a stomach for it. This is blood in the streets right now.
Yeah. And
That's where I'm coming from. I still have total faith, and I think it's a buy. So that's where I'm coming from.
yeah, I agree. And I think something I've noted to comment on right here is um, just XBI as a whole is down. And so some people are like, oh, biotechs are doing bad. That's why it's going to be down. But something that I don't think people are talking about is, well, a lot of the companies in XBI are earlier stage biotech companies, which are really thrive on the future sales. And for people who don't know much about the pricing for early stage biotech companies, is really about your peak sales in the future. And it's adjusted forward with kind of like a discounted model and with a risk factor in it. But so the risk factors, can be the same regardless. But when inflation's very high, that decreases the purchasing value of the dollar in the future, which decreases the value of potential future sales. So if we have high potential future sales in a company, that's really going to decrease the value of those sales when inflation's through the roof like it is right now. So I think that's something that a lot of people just aren't necessarily taking into the picture.
You discount those future cash flows, as you say, more so. Exactly right. And so that's been happening throughout the whole investing environment. That's right. Great point. There's another reason. Yeah. So with the inflation and also the accompanying interest rates as well, you get the interest rates going higher. So the risk-free rate, at least the nominal rate return, is much higher. So it makes holding on to $1 now more valuable than those future cash flows, like you say.
That's true. For sure.
Very good point.
And like you were saying, so many people were saying, "Oh, I missed the ship," or whatnot. And I think there's a good point. There's a good reason for that, is because we had so much optimism behind the stock, in the summer and even after the summer. Do you want to touch on some of those reasons?
Well, we got the 6-month data. They did for the first time ever with something like Aduhelm. Alzheimer's disease is a disease of constant decline. People get worse and worse and worse over time. So it would be, if you could only hold people steady or make them decline just not as bad, that would be a big improvement. There's no good treatments for Alzheimer's disease. But at 6 months in Cassava Science's trial, people got remarkably better. And not only did they get better at 6 months, but after 2 and 3 months, we heard from Dr. Gonzalez Rojas, who anecdotally was saying, we are pleasantly surprised, were her words, that people are getting better. And here are some stories. So after that was around April or February, I guess. That was 6 months. Then we got 9 and 12 months, and we got biomarkers, and the data got better and better. Quite literally, the best data in the history of Alzheimer's disease. And even though all of the data has been attacked so severely, it's been consistent and terrific. But even if it wasn't, which it is, the anecdotes we got from Hillary Metz, her father, who couldn't even talk on the phone or drive around his hometown, then drove from North Carolina to Florida to see her, or Dr. Douglas Baker, who has 2 acquaintances, one of whom, a very eloquent woman that everyone liked, had the behavioral issues and became sort of nasty and got better with Simifalam in the open label. Another of his acquaintances was a doctor who had to stop checking his email and then started counseling people on their health as a doctor again. Then Dr. Boris Nikolov talked about people cooking again, doing email again, and Dr. Gonzalez Rojas talked about people remembering names, phone numbers, and remembering whether they took a shower or not, all to corroborate the best data ever in Alzheimer's disease, which is the biggest unmet medical need in the world. So the stock has gotten obliterated, but the data has gotten better and better as the stock has gotten more and more destroyed. So it's the value proposition is getting better and better. And if I could, one more thing, Jacob, you made that terrific point about the discounted cash flows, about how future cash flows get more discounted when there's inflation, which is an absolutely great point. However, a counteracting point, because that's totally true. But if there's one thing you can do is just hold on to your equity, a piece of this company, and matter what the value of the dollar does, the value of Simifalam won't change. It may cost more dollars if the purchasing power of the dollar declines. One thing you can do is hold on to the equity of a good company, a good innovation company, and ride it out as a countervailing thing.
Yeah, that's good. That's a good point. And, I think we talk about the data and we say, oh, the data is so good, it's so much better than other people. But what does that really mean to the average person? What does that mean to you as a viewer? And I think the best way to like see this is we created a visualization that compares Cassava's data to a placebo compared to Aduhelm, which is received an accelerated approval, and the three drugs who have received BTD for Alzheimer's. So that graph of all that will be included in that research report you can get at the end of the video. And I would highly recommend it just as a great visual to see the dramatic difference. You'll see right away, you'll see one line's different than the rest, and that's Cassava Science, Simufilm. Yep. And as you were saying, the short attack, besides really hurting the company itself, it really hurt investor sentiment.
Yeah, that's true.
And what you were talking to me earlier about how some of the things you saw happening to let you kind of see that was a short attack. What were some of those signs that you saw?
Okay, so thank you for asking that. So first of all, this event had sorry, looking at the wrong thing. So we had Refinitiv. So Refinitiv used to be Thomson Reuters. They became Refinitiv. They put a sell. They went from hold to sell on April 4th on Cassava. They also, on that same day, if you look at the dark pools, that was the day that Cassava got obliterated. It got obliterated all week. But
So
it got to.
what's a dark pool, real quick, for our viewers?
Great question. So if you go to buy or sell and you put a bid or an ask out in the market, everybody in the market sees that, and then it's going to influence the market. And so if you have an enormous position and say, hey, I'd like to buy everything in sight, the price is going to go up a lot and you're going to have a whole lot of trouble getting your position at good prices. Likewise, if you say, I want to sell as much as I can, then it's going to obliterate the stock price and you're not going to have a hard time getting good price selling. So what they allow large holders and large institutions to do is to go to each other and say, hey, rich institution or rich individual, I have an enormous share of shares, an enormous block of shares or options that I'd like to buy or sell. Would you like to buy or sell? Just between me and you, I'm not going to put it out there for the public. It's questionable about whether that's okay whether it should be allowed, but it is allowed. So when they do these things in the dark pools and there's no oversight, to stay without oversight at all. So you really have no idea what's happening. And they moved it in the dark pools in order to move the price, it would seem. You see this in the dark pools along with short and distort attacks in order to move the price in coordination with the market makers. So they put a sell on it, like, oh my gosh, we think this is bad. And oh, look, it's going down. It must be bad, as they're directly taking it down, not influencing sentiment to take it down, but using the dark pools and market makers to take it directly down. And then Refinitiv fraudulently put a feed into their feed on Interactive Brokers, which I have. It's listed, at least on Friday still, Remy Barbier as selling half of his position, which he never sold anything. And they said, look here on the proxy, it says he sold. He didn't. But right when they downgraded the stock, they also put a fake sell from the CEO and did direct manipulation in the dark pools and took it down from about 40 to 25 or whatever it was. And Refinitiv also, when the stock in 2020 was taken from 8 to 2 on the Sabotage 2B results, the first readout of the Sabotage 2B results, it was Refinitiv again that was there to put the sell on, and then the high volume shorting, taking it from 8 to 2.
Yeah, for sure. And so why? So, you think, wow, the insider selling, that's really bad. And that's bad across the board. Yeah. But why it's particularly important in the Cassava Sciences case is because one of the key investment theses for me, and I'm sure other people, is the CEO's holding of the company. And you think, that's kind of weird. That's kind of weird, you're probably thinking. But the thing is, not only has no insider sold for multiple years, they've consistently accumulated shares. And insiders of companies know more than anyone else about the company and how it's doing. So if the insiders are consistently accumulating shares, it doesn't make sense for the company to be, in bad shape. If like the biggest like attack with the short campaigns, these people are just in it to enrich themselves, but they haven't enriched themselves. They got shares at $1, at $2, and it went up to over $100, and they didn't sell a single one.
Exactly. Yeah. Exactly.
Not only I would argue almost that's a bad decision on their part, because that's just bad risk mitigation. But they're
Yeah.
that confident. They're that confident in believing it that strongly that they don't make probably the decision that you should make, to shave off part and take profits.
I'll
But
tell you, I
instead,
appreciate it as a shareholder. I appreciate that they held in
yeah.
there with us. Yeah. You make a
So
great point. Just out of prudence, it would have only made sense for them to lighten up. Yeah.
yeah, and I don't think shareholders really would have blamed them, because
No.
that's kind of what you do.
Yeah.
And they
Look,
didn't.
most of my net worth is in this 90% now or whatever because it shot up so much. I just have to be prudent and take some off the table. But they didn't. Yeah, nothing. And if like you said, if they were fraudsters, Mr. Bobby has 2 million shares. It went up to, if it goes up to 125, which it went way over that, that's $250 million. He could have taken $250 million and run, and it wouldn't have been illegal at all or even unethical. And he didn't. If
Yeah.
they're fraudsters, why didn't he take his $250 million?
And not only that, the company has the insiders, specifically the leadership team at the company with Remy Barbier, and some of the other people. They have millions in owed to them from incentives, by increasing the market cap for certain periods of time. They didn't pay that. They left the money in,
That's right.
hoping to get paid probably
Great
later.
point.
They left the money in for drug development. They could have easily done another round of financing. They have over $200 million in cash they could have paid themselves, but instead they used that money to promote and develop the drug, which I think is a great sign that they're truly about developing this drug rather than trying to enrich themselves, because they haven't enriched themselves. The only thing that they've done is had their reputation destroyed.
You make such a great point. They have milestones that they hit for market cap, and when they hit them, they're allowed to pay out cash to themselves, and they themselves decide. They are their own committee that decides if it's time to pay it out or not, and they're allowed to, and they've not paid out any, zero. When they've and again, it wouldn't be illegal or unethical for them to just take cash. And if they were fraudsters, wouldn't they take the cash that they're owed? Probably.
Yeah. And so there's just things that don't add up to this company being a fraudster company. And like outside of that, the thing is the amount of people they would have had to fool for this to be fake. So granted, Theranos, they fooled a lot of people. But you know what Theranos never did? Theranos never had a clinical trial. And that's the big difference. The amount of scrutiny under a clinical trial, the amount of government agencies you'd have to fake, the amount of funding they received from the National Institutes of Health. These are prestigious places where it's very difficult to work. You can't
just a black box.
It's not just some Joe Schmo that's looking at their things. These are the best in the field who have looked at the results, approved it, and let them move on. It's not like Theranos, where it's just they fooled some private investors. Theranos, one, wasn't public, so didn't have the public scrutiny, but two, didn't do any clinical trials.
Yeah. Cassava got special protocol assessment. They went to the FDA and said, look at all of the entirety of everything about this drug, all the data we've ever generated. And they said, okay, the FDA said, what we want you to do is give this drug to 1,750 people twice a day for a year. And we're going to give you special protocol assessment to help escort you along the way and be successful. That's what the FDA said after scrutinizing everything. That's how poor or how true the FUD is, or how bad the drug is, all that stuff.
Yeah, and all the points I mentioned to you, I've mentioned previously here with the insider ownership, not paying out all that are just great points why I continue to be optimistic about the company outside of the data. And there's some other ones. And for example, Joe, would you be able to update us a little bit more just on why the company's been so quiet and not being able to say stuff, and then kind of just updates on the trials?
Absolutely. So if I may, I got some notes here. Maybe I'll go through and see if I can hit all those points.
Perfect. Yeah, go for it.
Already. So as we went into this fireside chat, we had reason to have our expectations up. We were due for data. The company had even said multiple ad hocs with an S, which we should still get this year. But we've been due for biomarkers. We got 6 months, and we're going to get 12 months. It's been more than 6 months. We're due for this. We had reason to expect that. in past updates, Mr. Barbier has also said we should expect a large cash infusion, more updates regularly from the company. And as far as breakthrough therapy designation being a possibility, yes, yes, and yes. So we had reasons to get our expectations up. Going into this fireside chat, that was the way it was. The event was a special timing. It was a week late after the conference where they said, we're the only company that wants to come on late. We got something for you. And they went through basically point by point as if the lawyers were there with them in a prepared statement, downplaying everything, basically trying to pull back all expectations. And including saying the look-ins, we wanted phase 3 look-ins. They said we could get a penalty for that. Not everybody agrees with that. And they didn't give us data either. Okay, they also downplayed the possibility of early approval. Okay, but there's plenty of reasons for optimism. So they did give us an update on enrollment. And the sites are expanding internationally and up to 175 sites, which is very good. And it's going very well. So most of those sites are listed and more than half are now enrolling. It's been taking about 2 to 3 months to get sites up and running. So these trials started October, November. But the enrollment, there's only about 60 people total and 170 people in screening. But that's probably going to get a lot better because all of the sites have been, basically all this time has been sites coming on. We're probably about to start getting better numbers there. Mr. Barbier did confirm with his language that he did all but confirm with his language that the cognition maintenance study is the key for breakthrough therapy designation. He then questioned the value of that as far as early approval, saying it would be tough to fill the phase 3s if they were already on market. But he did not, but he did basically confirm that CMS and BTD are linked. We have all of the anecdotal testimonials. The shorts never attack the drug. If you notice, the shorts attack everything but the drug. They attack Mr. Barbier, they attack Dr. Wang, they attack all 2008 studies about mechanisms of action, but they don't attack the drug because the drug seems to work and be safe. The filament science, filament A, has both in dementia and in healthy long-term memory. There's more and more and more science backing that. And that filament A, we already know filament A is ubiquitous, or it's everywhere in the body. There's now more and more evidence about its malfunctioning being a problem everywhere in the body, and fixing it being a key to health everywhere in the body. So more and more science around the mechanism of action is getting bolstered for this as well. Here's a big one we didn't talk about, Jacob: blockchain. There's a lot that when you have shorting, you create extra shares. And in some of these cases, like GameStop and AMC, and if viewers are familiar with Wes Christian and that lawyer and all the companies he's worked with, the short percentages that are reported, he says, are bull or garbage, whatever he said. So the short percentage are actually much, much higher from these phantom shares, international subsidiaries, where in an international, it's legal to have one share and re-short it as many times as you want. So there's no limit to how many shares they can have to have created without reporting them. So the reported short count is not correct. How do you ever call these to account? Well, if you pay a dividend, there's one thing. So there's 10 times as many shares out there, and that explains why the share price keeps going down. You could pay a cash dividend out, and then everybody that is short of this has to come up with that. Another thing you could do, though, if you don't have retained earnings and can't pay a cash dividend, is you could use the blockchain. You could issue an NFT on the blockchain with the business use case of filling up those phase 3s. Hey, look at these JPEGs of compassionate people with their families for Alzheimer's disease. We're giving these out to draw attention to the phase 3 trials. But on the blockchain, these NFTs have an individual identifier and can't be faked. And these will have to be delivered to everybody that has a share of Cassava Common. So those shorts seemingly will have to cover, and that could drive the stock price. When Overstock did this, they went 40x. When they did a preferred share on the blockchain, the shorts had to cover, the stock went 40x before they ever issued the share, 40x. So that the block, and Mr. Barbier is not an expert in this stuff, but he said that we are open to that. I forget what his words were, but as shareholders, that's something we've been looking into bringing to him. So hopefully sooner than later. So that's a big thing. Maybe they're just lawyering up until after the City University of New York, so they can go back to the tactic of surprising the market, which is fine, painful way to get there. As we talked about, the FDA reviewed it and gave them SPA. we've got coming up, the CMS is about less than 1 year away. In September of last year, they filled their open label trial of 200 people. So 1 year later, September this year, they'll be all done and the last people can go into CMS. 6 months later is February. So the CMS will wrap up by then. And that'll start the countdown to then hear any time for CMS. Then phase 3A, then phase 3B. So there's 3 decision points in a row for the FDA to do the right thing, get breakthrough therapy designation and get this on the market. There's also the FDA perceptions around Aduhelm. The FDA fumbled everything around Alzheimer's disease. This is their chance to make it better. And you only need a 20% improvement for the FDA's marker for cognition is to be 20% better than the awfulness that is Alzheimer's disease. So if Alzheimer's patients drop 5 points, you only got to drop 4 points. Well, this is getting better, not even declining less worse. So, and then Mr. Barbier also gave a shout out to the writers, which Jacob, you and I, we'll go ahead and take credit for that. Who knows what he was talking about? You and I can take credit for that. And shout out to Jacob Braun for starting Braun Capital. Congratulations to you, my friend. For people that, I don't know if you talk about yourself enough on this show, but to get to know you, you're very, very impressive person, everything that you do. And now you've started Braun Capital. There's no doubt in my mind you're going to be very successed. So good luck with that venture.
Yeah,
congratulations.
Thank you, yeah, it's just, like the last words I want to say here is I was talking with someone who had talked to a physician recently who had a person in their family who's again early onset Alzheimer's. And as I'm sure many of the savages, as they like to call themselves, can attest to, when you hear about someone with Alzheimer's, you definitely mention the Cassava Sciences and the trials because, it is something that might help the person. Yeah. So they mentioned this to the physician. He had been practicing for years on years and practiced over 30 years. And when he told him, he said, that can't be true. That sounds too good to be true. And this is, again, many people, for one, don't know about Cassava Sciences, but two, it just shows you if a physician just goes instantly dismisses it, that can't be true. That shows you the potential of this. And that also shows you why people are shorting it, because some people, their short tactic is literally, if it sounds too good to be true, let's short it.
Exactly right. Exactly right.
So with that, Joe, do you have any final words? And also, where can we find you?
Hey, thanks for asking. Attendees Club on YouTube and Joe Springer at Joe Springer on Twitter. Thank you for asking.
Okay, thank you, Joe, for coming on as always. We're going to show you where you can get that research report here at the end of this video. I highly recommend checking it out if you want to learn more about the company. Thank you for watching, and I hope you have a good day.